Hi, this is Chiro. The Tesla Rollercoaster is the first video in a series of videos I'm calling Investing Stories, where I discuss a personal investment of mine and what I learned along the way. I'll mention here that while I have investments in Tesla, I'm not sponsored or otherwise affiliated with the company. Tesla's been in the news a lot recently. At the time of recording, this has been in large part due to its meteoric rise in share price and other recent catalysts, such as profitability in Q2 2020, which has made it eligible for inclusion in the S&P 500. In any case, the day-by-day news isn't the focus of this video. Let's talk about how Tesla got to this point. Tesla was founded in 2003, and its mission is to accelerate the world's transition to sustainable energy, which arguably Tesla has done and continues to do. Fast forwarding a bit to 2006, Elon Musk's secret Tesla Motors master plan describes Tesla's roadmap to success. In brief, Elon talks about the problems facing electric cars, how Tesla addresses these issues, and details their plan to release a high-performance, high-profit margin car, the Tesla Roadster, followed by increasingly affordable electric vehicles to foster mass adoption. Down the road, this eventually translated into the release of the Model S and X, and eventually the Model 3 and Y. I've glossed over most of the details in this plan, but I've included a link to the post in the video description, as well as Part Deux, or Part 2, of the master plan that was posted in 2016. 4 years later, in 2010, Tesla went public through an IPO at a price of $17 per share. Apparently in a bid to set the tone for the future of Tesla shares, the price increased by 40% on that same day. 6 years after Tesla's IPO is where I come in. In 2016, I was hoping to get into investing. As a university student, I didn't have a ton of spare money, and I also didn't have time to look into the whole investing thing, as I was busy playing video games. Tesla was one of the companies I began looking into, primarily because they brought a Model S onto our campus, and my classmates seemed really excited about it. I'm not a car person by any measure, but the car certainly looked pretty cool, and I liked the idea of electric cars being a thing. Throwback to Who Killed the Electric Car, a documentary from 2006. At this point, I started digging into what the company stood for and how Tesla stood apart from the competition. The Model S had the performance, range, and looks of a cool car. In contrast, compared to gas cars, other electric vehicles available at the time appeared to require a compromise of basically all of these factors, and the most confusing compromise to me has always been the looks. Why? Why did they have to look so bad? As icing on the cake, I visited New York that year and checked out the auto show. I was excited to see an electric car with specifications comparable to the Model S, but was quickly disappointed when I realized it wasn't due for release for another few years. So as my first foray into buying shares of a specific company, I bought some shares of Tesla. Like any professional investor in the making, I was mashing the refresh key on the stock ticker like I hope you're mashing the like and subscribe buttons on this video. I'm not gonna lie, I made entire dollars buying and selling these shares. And I'm also not lying when I say, those dollars felt pretty cool. For the next few years, the shares rose and fell like the volatile stock Tesla is, albeit a 20% swing every few weeks, not every few days. Some of the catalysts for this were the announcement of the affordable $35,000 Model 3, subsequent release of the Model 3, and probably every earnings report in between. Tesla also purchased SolarCity, a company focused on solar panels and solar roof tiles. The jury's still out on this transaction, however, it's somewhere between a future multi-billion-dollar income stream in the untapped energy sector, or just Elon's Hail Mary to bail out his relatives. Anyways, as much drama as there was, the year 2018 was probably where it became clear that the ride had only just begun. The Model 3 was somewhere between an utter manufacturing disaster and an outstanding success in the making. Tesla wasn't regularly profitable, but was riding a wave of future success for the Model 3, and Elon revealed that Tesla might be taken private at a price of $420 per share, funding secured. If you don't remember Tesla going private, that's because it didn't. What did happen, however, was Elon got sued by the SEC for running his mouth, ended up having to pay a fine, and had his Twitter rights restricted. As a fan of Tesla, the next year of investing was disappointing. The share slowly but surely bled to under $200 as Elon picked fights with a dude in Thailand over rescuing kids trapped in an underground cave, the company brushed up against bankruptcy, and in general, Tesla's future seemed pretty bleak. I was fortunate enough to pick up some shares near the bottom, but it was more an effort to lower my average costs than actual hope for Tesla to recover, but recover it did. Leading up to Q3 2019, it appeared that Tesla turned a corner and was showing signs of being sustainably profitable. This went on for months, and there was a sort of vindication of having survived what appeared to be a negative news cycle in hindsight. With the company more reliably profitable and continuing to grow, there was literally nothing that could stop the success of Tesla. Wait, they were stopped by what 19? The only thing that could bring Tesla down was a hyper-infectious disease that shut down the world. During the ride down, I eventually trimmed my position, but doing so never put me at ease. Like most people, the intention was always to buy back in when it was lower, but having already been burned by Tesla a few times may have paid off. Within days of trimming my position, I bought back in, and I suppose luck was on my side. In the coming weeks, it became clear that while Tesla suffered during the downturn, it remained in a great financial position compared to most, if not all, the legacy automakers. Like the broader market indexes, Tesla continued from strength to strength, and that brings us to where we are today. So what do I make of this? If nothing else, I hope I provided some insight into what it was like being an investor since 2016, and how nothing was ever certain until it actually happened. A lot of things came down to luck, and there's no saying where the share price will go from here. Having said that, I support Tesla's mission and believe they will continue to innovate in areas such as autonomous driving and energy solutions. So while a price-to-earnings ratio of over 1,000 is probably getting a little ahead of ourselves, I hope the question is when, not if, Tesla lives up to that valuation. While I continue to believe Tesla will do well, there are many other companies also working to transform the transportation sector to be more environmentally friendly. Check out my playlist on how I invest in some of these companies, for example Hyliion. And that's that. Hopefully you enjoyed this story. If you did, consider liking, subscribing, and hitting the notification bell. I'd like my future content to include stories of other investments I've undertaken, both good and bad, and strategies I use to invest in even more companies I'm interested in. I'd like to hear your thoughts and feedback in the comments below. With that, thanks for watching, and have a great day.